and parts of Iraq.
It is 3 minutes to 9. You're watching Breakfast from BBC News, and it's thought that the Bank of England is highly likely to cut interest today, as well as its growth forecast for the economy.
What could a cut in rates mean in reality? Well, Ben is at a factory in Leicester. He's been getting busy with some sticky tape. Not really the kind of thing I thought I'd be saying to you first thing in the morning, Ben.
Well, you know, the jobs that you guys send me on, someone's got to do it. Morning, welcome to Leicester. We are in the warehouse of the packing tape factory, and I'll explain all of that in a little bit. But there's a tendency, isn't there, when we talk about interest rates, to think about mortgages and savings. But it's also important for business, because this place that they sell, this is going to Kuwait, this one's going to Finland, this one going to Saudi Arabia. I mean, big business, and they sell right around the world, and they're doing really well. So what they want to do is expand. So a cut in interest rates would frankly mean it's cheaper for them to do that. So let me explain. Well, interest rates, they're currently at 0.5%. They've been at that level since March of 2009, and they're already at a record low, but it's thought that they could go even lower, and they could be cut by, well, 0.25%, and that would take them, with a quarter-point cut, it would take them to, well, 0.25%. And that means that business could find it cheaper to borrow and to expand. So what does it mean here? Well, Mike is the boss, and Paul's from the Midlands Economic Forum. Mike, to start with you, just explain to me what it means for you here if there was a cut in the cost of borrowing.
Well, for us as a UK exporter, it's great news. It makes our products more competitive abroad because it's keeping the pound at a low value and also making the cost of asset finance cheaper. So for a company intent on growth, that's great short term. The concern I have really is then what's going to happen next. And I think a lot of us have got some uncertainty about where this goes and what Brexit's going to mean going forward.
Now, Paul, you don't necessarily think it's a good idea, that cutting rates could be counterproductive. Why?
Well, I think we've actually exhausted the options on monetary policy, and the most we can cut them at the minute is about 50 basis points before we go into negative territory. And that impact on pension funds and even on the ability of commercial banks to lend could actually constrain them. So I think we've exhausted monetary policy. We need to be looking at the budget and taxation. So hopefully this afternoon we'll get a statement from the Chancellor that they are going to be more proactive on fiscal policy, and maybe in concert with the Bank of England they could look at new quantitative easing that backs up the government's idea for regional infrastructure bonds.
OK, Paul, Mike, for now, thanks very much. So you'll have seen some of our handiwork there when it comes to the tape. Let me just show you what it is that they do here, because, well, they make this stuff. It's used in the building trade. And look, plenty of different colours, and something I learnt this morning. Well, look, in France, the most popular one is orange. Over in Germany, it's white. And us Brits, well, we like this stuff, the silver stuff. But let's talk, all of us. Jasmine's with me, the personal finance expert, and David from London and Country Mortgages. Jasmine, just to explain that cut in rates, how much difference could a quarter-point cut mean for people with an average mortgage?
Oh, well, with an average mortgage, it depends what you've got. Of course, if your money's going down, if you've got a tracker rate, brilliant. If you've got a fixed rate, nothing at all. And then, of course, if you're on a standard variable, well, it might go down, it might not. So, generally speaking, if you're borrowing, it's good news. But if you're a saver, really bad news. And there are more savers than there are borrowers in this country.
Yeah, and that's always the important point, those savers that lose out. David, when it comes to mortgages, I mean, we've seen the struggles that many first-time buyers are facing. A cut in rates would help them. It would mean that borrowing is cheaper. But there's still a difficulty, I suppose, for many people just to get on the property ladder in the first place.
Well, high house prices, of course, persist, so you've got to get the deposit together. The bigger the deposit, the lower the rate. The good news is that mortgage rates are really affordable. They're at record lows generally, so there's some good deals out there. We've still got to get the money together to be able to buy in the first place.
Yeah, that's always the challenge. David, Jasmine, thanks very much. So it's really interesting. It has an impact on all sorts of things, of course, not only the cost of borrowing for all of us, for businesses and for consumers, but the big question is what happens next? Where could interest rates end up? This is expected to be just the first cut of what could be a longer, prolonged downturn in the cost of borrowing. We'll get that interest rate decision at midday. As we said, expected to fall to 0.25%. It's lowest on record. It's already at a record low, remember, so it could go even lower. But then the big question, could they fall even lower? Could they go as low as zero? That is the big question, and one that we will be watching very closely. I'll see you soon.
You didn't make that zero with all the tape, did you?
No, for once, that's the one thing I didn't do. See, there you go, that's a 0. If you want a 0, you can have that one.
Oh, look how clever you are. Hey.
Very good.
Smart cookie, that, Ben. Hey, look after yourself, Ben. Cece.
Now, it's been more than a century since golf was played at the Olympics, but this year, of course, it's back, and there are no prizes for guessing who on this programme is most excited about